Brian, and welcome to Crypto Weekly. I want to start asking you about stable. There's tons of L1s right now out there, tons of layer ones. Do we need another one for stable coins in particular?
That's a great question, and thanks for having me today, Henry. For stable, our mission is very straightforward. We want to solve the problem in terms of network congestion and unpredictable gas fees. Being a layer one allows us to accomplish that mission head on. Right now, using an example, if you are running an institution that needs to move $100,000 on a stable coin, you're going to transact with that. And let's say at 2 o'clock, it's about $5 to make that transaction. But later in the day, it's $50 to $60 because of network congestions, different markets came online. And that's a problem for the CFO of that company. They're not able to predict their costs and understand what needs to be passed on to the customer. So what our layer one's doing is we use USDT as our native gas token. So your gas fees are always predictable. You know what they're going to be before you transact. And we added on something of subsecond finality. With that, you can have that money instantly on the other side and ready to be moved in a liquid sense rather than locking up capital for could be 10 minutes or an hour on other layer one. So I'd say our layer one is solving the problem of moving money efficiently and effectively.
And when it comes to predictability, I agree that there's no other token where the gas fees are being calculated. And here it's actually in USDT. But also from a transaction perspective, does the price of the cost vary per transaction, or that is actually fixed and stable?
Sure. So in peer-to-peer, I think we have two models of this. In our peer-to-peer sense, it's always going to be gas-free. Okay. So our layer one allows you and I to move money back and forth with no fee and that same great sub-second finality. In terms of the institutional side, if you want to move something, what we have is something called guaranteed block space. That's going to be, you can use a subscription service to guarantee what your rates are going to be, whether you buy a daily, weekly, or monthly pass. And then if it's on the open market, there may be a variable fee that comes in, but it's not going to be the same fees you see now where you have a non-native token or non-USD token that has that volatility. This is always going to be based in USDT.
So obviously, I presume if you're launched stable, you must be quite bullish on the outlook of stable coins. And there's a number of predictions out there. The market cap, assets will hit 2 trillion, 3 trillion, and so on and so forth. From your perspective, where do you expect we'll see very high growth when it comes to stable coin? Will it be emerging markets? Will it be institutional? Will it be B2B? Is there a sector you want to focus on in particular?
Yeah, I think there's been a growth across the board. So obviously we saw, during COVID, there was a big growth in the emerging markets where we saw stablecoins become the lifeline for a lot of individuals to move money across borders or remit money home. And then businesses have taken a look at stablecoins now that regulations come into play, whether it's the Genius Act or other legislations that have really given that framework and that comfort that's needed for institutions to use a tool that they saw was valuable but didn't know how they could use it. So I would say across the board, I think you're going to see the dollar amount come in from the institution sides, but you're going to see the transaction numbers come in from the retail side or the end user side.
That makes it a healthy balance as well. And Brian, there's a lot of talks about financial institutions launching their own stable coins or the deposit tokens, depending on the situation, especially post-Genius in the US. How do you see the outlook? Do you believe we'll have 2, 3 dominant players like USDT, USDC, and others? Or do you believe we'll have some of these private financial institutions launch either their own stable coins or deposit tokens?
Sure. I think there's definitely a need in different aspects of different coins that come into the market. An example would be, I think there's a yield token or something that's providing a unique value that's not available on, let's say, the largest player, USDT. When you have a unique value prop on that token, it could definitely have its market share and it could maintain that. But in terms of the limitless number of tokens, that's going to be a market-driven decision. I can't be the predictor of that, but I would say at 70% of the market, USDT, which obviously we have a favor towards being our native gas token, I would say that's definitely holding its mark and it's not looking to slip. But some more unique or some more novel ideas that come into play that actually have a grasp and can build a following, I think will definitely have a play in the future.
And do you believe we'll have a US versus the rest of the world element? I mean, for example, with USDT, there's USAT, Tether is launching in the US under Genius, and there's obviously the international USDT or global one. How do you see that evolve? Do you believe we'll have stable coins that are focused more solely on the US market and one global, or do you think they'll be all matched together?
I think it's going to be a mix. I think you have different countries and different jurisdictions building out that framework, and I think that the early adoption of that framework definitely helps the local players in those markets build a stablecoin that satisfies the needs, whether it's a domestic market play or an international. I think cross-border USDT is going to hold a lot of strength just because the familiarity with the currency and also the liquidity. I think domestic markets, those can survive, and also as they become growing market makers, they can become a larger player in the industry.
You mentioned familiarity and liquidity. Obviously, these are key for stablecoin growth. There's a lot of talks, like putting the crypto aside, the geopolitics around stablecoins, right? With obviously the dollar, over 95%, if not more, of stablecoins are dollar-based. And China now is looking at launching its own stablecoins outside of the CBDC. How do you see that playing out? Do you still believe we'll have US dollar stablecoins dominate the market for the foreseeable future, or competitors ahead?
Sure. I mean, using the metrics of currently in play, it's really hard to lose a 70% lead. But at the same time, I think there are needs for different currencies that will grow over time. And it's obviously when the regulation or the jurisdictions provide the framework in order to enable that. So absent framework or absent the rules to follow, it's hard to get that mass adoption. So I think as that adoption comes into play, I think you'll see the growth there. But right now, I think the U.S. definitely came out, farther ahead than it was previously by putting in such concrete framework that allowed people to build, as you mentioned, USAT, and they're able to get that off and running because they understand what they can do and how they can grow the business.
And one last question in 30 seconds. Obviously, there's Stable, and obviously something that you're leading. We've seen other L1s or L2s trying to capture this market share, Plasma being one of them. How is Stable different from some of the others who are trying to build really something bespoke for stablecoin payments?
It's a great question. It's something that I get to talk about a lot. I say our biggest differentiator is that USDT is baked in at our core. So our native gas token provides that comfort when you're transacting on the stable chain on how much it's going to cost and how long it's going to take to settle, because we're not adding an extra layer of volatility. So I think we want to be user-centric, and we want to be centric to how money moves.
Love it. I think we'll have you back at one point to see if all these predictions turn out to be true. That was Brian Mehler, the CEO of Stable. Thanks, Brian, for being with us.
Thanks.